Hello traders, it's Greg here from Master Trader. I'm going to share with you a strategy of trading gaps that I shared with those in the green room last week, trading Goldman Sachs for what was a substantial gain. And then while it started as a gap trading strategy, I turned it into a swing trading strategy because it had the potential to continue to move lower. It had a lot of things going for it, so I'm going to share that with you and how we did it in the trading room. Now, a lot of gap traders trade, like I say, on the edge of their seats, scared to death from 1 minute charts, trying to scalp a little gain out of a stock that has gapped in the morning. Well, while there's nothing wrong with doing that, it also can lead to some pretty large, substantial losses in a very short period of time. Those that trade that way, typically using those 1 minute charts, try to put on large position sizes, and any little tick that goes against them, things can turn pretty ugly pretty fast. We're trading a relatively small amount of shares, giving stocks a little bit extra room from higher time frames using multiple time frame analysis. Some of the concepts that I'll show you, you can see put the odds in your favor, and it's a much calmer, less stressful way to trade. So let's take a look at that. So in Goldman Sachs, what caught my eye was the fact that it was topping out, or appeared to be topping out over here. You can see the retest of this prior high over here, and I love these M-top type of retest patterns. And as it started to move down here, you can see how it held that low. So it had resistance up here, it had support down here, and so it was developing at what could have been a continuation move to the upside, but that didn't happen. On this day, you can see I've got the date down here. This was on the 7th. It actually gapped down, and that caught my eye since it was in the gap scan list that I use. And it was gapping down under all of this support here. So I've got the hourly chart up here, and you can see how it was going sideways right here. And notice that topping tail. So intraday on the 60-minute chart, look at the 2 times that it was trying to move higher and failed and came down again. When it gapped down on this day, under this support with the combination of this daily chart, I said, this looks like it can go substantially lower. And it had what I call a tradable void below. A tradable void is a pattern where prices have moved up quickly, a momentum move, and then go sideways over time, created this void area below where there's little to no support below, and that opens up the door to what could be a trending move or substantial move lower in this case. So moving down to the 5-minute chart, I saw another little breakout failure type of pattern here, a 180 type reversal, gapping down under this support, and I told the room at the time, I'm going to short Goldman Sachs here under the first 5-minute low. Now, it didn't go down like this immediately. It had the potential to do so, and as it began to stabilize here, we watched the broader markets. So as an intraday trader, I like to keep an eye on what the broader markets are doing, and Goldman Sachs, while it did inch up a little bit, was showing relative weakness, another concept that we use to determine how a stock is either following the market or not at all and being weaker. So at that time, as it was moving up, I can tell you that I was a little uncertain about Goldman continuing to move up. But as soon as the market weakened, it just fell to the downside. And it just continued to do that, never trading above a prior 5-minute bar's high until it got down here. Now, another concept is a wide range bar ending a move. So when I saw that, and it traded above a prior 5-minute bar's high, I told the room I'm covering half of my position at that point, and because it looked good, I said I'm going to hold on and see if this will continue to go down in the later part of the day. Well, as you can see, it didn't do that. Anyway, as the time went on, I continued to keep an eye on that, and as Goldman retested this high over here, some traders in the room had said, hey Greg, I took my money down there, can I add to it here? And I said, sure. Add to it here. We've got this retest pattern here. I'm going to be holding on to mine into tomorrow. So when it gapped down again the next day and continued to go lower, well, Well, we just started, as they call it, counting the Benjamins at that time. Now, believe it or not, and this is documented in the trading room, I covered Goldman Sachs and told others to do it right down here at the low of the day. Did I know it was going to be the low of the day? Absolutely not. It turned out to be, the markets went higher into Friday. You can see how it accelerated higher here into the close like the broader markets did. But in any event, we got it down here. We closed it down here for almost a $7 gain. Now, that started out as a gap trade, turned into a swing trade, and turned into a fantastic gain. Now, let me show you a little more why I covered it down there. Switching to a 15-minute chart. Same concept. Wide range bar on a 15-minute chart. I shared that with traders in the chat room at the time and said, hey, we've held this since yesterday. It's done fabulously for us. It's continued to move lower. It was a great trade. I see a 15-minute bar, which suggests the end of the move. It did not suggest it would move up like this, but we covered it based on that 15-minute chart using the trail stop on the 5-minute chart, and we exited right above the high of that narrow range bar on the 5-minute chart. So that narrow range bar was the stalling momentum in the beginning of the transition that started this move higher. We didn't take advantage of this on the long side. It wasn't our intent since this was a weak stock. Nonetheless, it did have a pretty nice move up on that day. Now, I've taken everything off of the chart here to focus on what matters most, price. I do use moving averages. I do use volume. I don't use any indicators. But nonetheless, just using price is enough to make a determination of when you have a high probability scenario for trading a gap and when you could potentially turn it into a swing trade. Now, that being said, I'm offering my swing trading course along with my gap trading course. Now, you can get the gap trading course for free. That covers my 7-point system for trading gaps. The swing trading course is a standalone course. The gap trading course is a standalone course. The combination of two, you can trade swings, you can trade gaps. It's a fantastic combination that we're offering here. You can get 2 courses for the price of 1. Take advantage of this. It won't be out there offered for very long, but you can sign up. I'm going to put the link here for you to do that. Sign up for the swing course, and you will have the gap trading course free in your member area instantaneously. Any questions on the courses once you're in there, give me a shout out on my email, greg@mastertrader.com. Good trading.